again, I have not looked at any of these questions. And so I don't, okay, there we go. All right, y'all should see on my screen. All right, so the first question is, in Ohio, the amount a broker may charge for a commission is, so the first thing that I'm gonna do with this, and this is what I recommend y'all do, is if y'all off the bat don't know the answer, get y'all a notepad out right now and say, how much in Ohio do brokers charge for commission? Flat out, and look that up. You know, if you don't know the answer on a question like this, because this is an absolute, you know, and that's how I want y'all to start looking at these questions when we read them. If you don't know the answer right off the bat, just write on a sheet of paper, find out how much commission charged in Ohio. Then when you studying, you go and you find that answer. So it says 6%. I'm going to try to go through these fast too. It says 6% up to 6%, up to 7%, and negotiable at the listing contract. So now let me tell y'all the thing.
I thought I was always taught that it's up to the broker.
It's up to the broker, right? That's what I was just about to say. So the broker will tell you what their max commission is and what their minimum is. A lot of times, if you're a real savvy realtor, the broker will give you like, hey, you know, I'm gonna roll with you, whatever you want to do, because you bringing me business. So with your clients, if you want to go with a 6% commission, you can. But that's your money. Remember, the more proficient you are and good at selling the property, you should get paid more. So typically brokers say 7%, typically. But the more proficient you are as an agent and the more your name and your branding is you know, acknowledged out in the public, you may be just like, hey, I'm gonna charge you 7 because I know I'm gonna sell your house and you're gonna pay me for that service. You know, whereas you go with somebody else, they might have your property on the market longer than it needs to be. And so the answer to this, what y'all think? Negotiable at the listing contract, up to 7%, 6%, or up to 6%. Those are the answers. They don't have like an A, B, C, or D on here. So which one y'all think the answer is?
I think the last one, but
okay, let's have some conviction too, because if we get it wrong, then we don't know it. You know, so you agree with that, Carrie?
Yeah, I was kind of in between the last one and up to, well, no, the last one.
Okay, so let's click it. Let's click it. All right, so this is another important thing. Just because we got that one right, we still want to read this down here. Unlike some states, in Ohio, there is no state law that dictates what the broker may charge. It says, and I got to move my screen here.
And also we got to look at the options. It says up to 6%, up to 7%. Well, we know we can go past it. So we know them two wrong. Mm-hmm. We know it can be more than 6%. So
that, yeah, it's a process of elimination. But you know, right now that we got the answer, make this on your note. Like, make a note card out of this. I mean, this is an easy one to remember. The commission is completely negotiable in the listing contract. Now, again, some brokers are going to cap their commission. And let me just check and see if anybody else is trying to get in here, because I can't see it. So this class is going to be probably till about, I'm going to try to get it done by 11:30. So we're going to go about an hour and a half, and we lost 15 minutes waiting on those. So let's move this. Let's keep it moving. The next question A buyer asks the real estate agent to prepare a land installment contract. So let's start right there. If you don't know what a land installment contract, that needs to be one of your note cards. Write down land installment contract, flat out. All right. And then make that one of your note cards so you'll know what a land installment contract is. An agent obtains the contract and proceeds to fill out the pre-printed form for the buyer. What is this a case of? Answer one, this is a case of unauthorized practice of law, a violation of Ohio real estate law. All right, this is a case of authorized practice of law under Ohio. Hold on, my bad. This is a case of authorized practice of law and legal under Ohio real estate law. This is a case of a real estate agent engaging in an installment contract, meaning the client is responsible for the direct payment. This is a case of a real estate agent engaging in a land trust contract, meaning both clients are responsible for liability. All right. So first off, a land contract, let me just give y'all a little bit of background on this. Typically, in a market like this, you don't see land installment contracts, right? Land installment contracts are a financing mechanism. Let's go over the ways you pay for a property. Whenever you're thinking about purchasing a property, there's ways. You can go with a conventional mortgage. Hold on, let me step back. You can go cash, right? You can just buy it out cash, right out with cash. You can go with a conventional loan product or a loan. It's either going to be a conventional loan, FHA or VA, right? You can go with a land installment contract. So we got cash, loan, like a land installment contract. Typically, when you go into a land installment contract, it's an atypical property. It's a property that you can't get financing on, like a mixed use property. Some of those ones where you see apartments upstairs and a storefront downstairs, lenders don't like lending on those because those are deemed to be commercial properties. And typically they don't sell for a whole lot. And lenders don't like lending on, commercial properties, typically under $500,000. So it's going to be very, very difficult to get financing for that. And most of the time when you go down how you purchase a property, cash, loans, land installment contract, when you get to land installment contract, that means it's something wrong with the buyer or something wrong with the property. The only time, because most people, when they sell their property, they're going cash or you to get a loan, and they're going to want all their money up front. Land installment contract is not that. We went over this a couple of times before in a couple of classes that we have, but not in the agent success training class. So I just wanted to give y'all that background. Typically, when you're on a land installment contract, that property is an atypical property, or something's going on with the buyer where they can't come up with the money. They can't get financing on it. All right. And then they don't have the cash to pay that in full. So what they have to do is they have to enter into another form. It's a form of financing. That's what a land installment contract is. Right. Typically, when a land installment contract, you have a big, what they call down payment. So if I'm selling you my property, I got a mixed use property on St. Clair somewhere, and I'm about to sell you that property, and I want $100,000 for it. I'm gonna want $25,000, $30,000 up front, and then we gonna figure out. Let's just say I said $35,000. We gonna figure out how you gonna pay that other $65,000, typically over a term or amount of years. So we say, okay, I want $35,000 up front, and then I want the other $65,000 over 10 years, or $6,500 per year. So that's a land installment contract. Now, let's deal with the first one. This is a case of unauthorized practice of law and a violation of Ohio real estate law. Now, it's really important in this question that says proceeds to fill out a pre-printed. Now, if it's pre-printed, our purchase agreements are pre-printed, and we fill in the blanks. So if A was right, then we would be unauthorized practice in the law if A is right, because our purchase agreements are pre-printed contracts and we just fill in a blank, right? So I don't think it's A because of that. I don't know the answer, but because I know we use pre-printed docs all the time and we're not charged with unauthorized practice of law, I don't think it's A. Now, you're never allowed to, if you're not an attorney, you're never allowed to practice law if you're not an attorney. So I don't think it's B. And then and on C, it says, this is a case of a real estate agent engaging in an installment contract, meaning the client is responsible for direct payments. Now, that was another thing too that Ebony, she took her test and she passed her test. She said something to me that I failed to bring up to y'all. Typically, if y'all don't know the answer on that test, pick the longest one. Pick the one that got the most words in it. And sometimes that'll help. Honestly, I think it's C, but what do y'all think?
I think it's C.
I'm not sure.
I look, the thing is, man, with these tests, I'm about 80% sure that it's C, but with these tests, you never know. So you got a best guess, Ida?
I'm rereading the question one more time.
Okay. A buyer asks a real estate agent to prepare a land installment contract. The agent obtains a contract and proceeds to fill out the pre-printed form for the buyer. What is this a case of? Right? So if it's
but you can't fill it out, can you?
Now, if you go in there like, okay, say for instance, I go to Microsoft Word and I type out all the terms and stuff and I'm typing out everything, I'm practicing law because I'm writing a contract. But we may have had a law firm give us a pre-printed form. All we got to do is put their name on it and put the terms in it. That's not necessarily practicing law. But if you're sitting down writing the terms and putting language into a document, that could be considered practicing law. Now, I don't think it's B because only an attorney can practice law, right? So to me, it's either B. It's got to be either B or C or this answer or this answer. Now they may trip us up because just don't think if you're not an attorney, I don't think you're authorized to practice law. So the wording in this is just not what I want to see. I'm gonna read the question one more time. A buyer asks the real estate agent to prepare a land installment contract. The agent obtains the contract and proceeds to fill out the pre-printed form for the buyer. What is this a case of?
I think it's B. I don't know. I'll say B, you say C.
Okay. Carrie, what you think?
I think it's C because the buyer will pay the seller the direct payments, right? With the land contract.
Mm-hmm. Yeah, they're gonna pay them directly to the seller. But we do agree that it's either B or C, right?
But the agent is not allowed to prepare anything.
Right.
Well,
that's the confusing part. Okay, go ahead. Let's see the answer.
This is the reason why I'm saying that I don't think this is because remember, when you're getting ready to write a purchase agreement, just not even no land contract, let's set that land contract aside. When I get ready to write a contract for somebody, even if it's a listing or it's a purchase agreement, that document is already, all I got to do is put the price in there, down payment, if I want an inspection, how much earnest money, and I'm filling that in. So right then and there, I'm doing the same thing on a pre-printed form as I would be doing in this land installment contract. So
that's true.
The only reason I just don't think they'll call it an authorized practice. Now, if it's right, then we know that they are calling that authorized. I just don't think that they would call anything other than an attorney filling out. Now, this is another thing that we got to keep in mind. They got these two questions, so they probably think people think one of these is right. Right? Let's pick, I'm gonna pick C, but if you right on this one, either of you right. It's A. So let's read what it says. I just disagree with that. That's a bad question in my opinion. This is unauthorized. Let's see why they say it's wrong. This is an unauthorized practice of law and violation of Ohio real estate law. And write this down. I'm gonna give y'all this link, so if y'all go back and answer the questions. A real estate agent or broker may complete only a pre-printed. Didn't it say it was pre-printed?
Yeah.
Oh,
at the top.
See, they said you can only pre-print a sales contract. That's why it's unauthorized, because this is a land contract. All right, so that's the distinction.
That's what I thought. But what is the difference between A and B?
So we only allowed to fill in a sales contract. They cannot.
The land contract created by the seller.
What you say?
Is the land contract created by the person who's selling the property?
That's a good point. If I'm doing a land contract, I'm gonna have it, and I'm gonna tell you here, this is the contract that we gonna use. All right. Now you also got to ask yourself who is going to be preparing that contract. But let me read the rest of the answer real quick. This is an unauthorized practice of law and a violation of Ohio real estate law. A real estate agent or broker may complete only a pre-printed sales form. They can not under any circumstance complete a pre-printed land installment contract, option, or lease, unless, of course, he or she is party to the transaction. In this question, they are not, meaning this is an unauthorized practice of law. So that was a good question, actually. That was a real good question. It's a good exercise. What we might want to do is just look up what this would be probably is something that you would be on a state test, I would imagine, because I would imagine this is going to be something different in each state. So this is probably more of a state question that you'll see. So let's just remember that. But that was a good question. And just go over these. If y'all want these answers, just go over these. All right, the next question. In Ohio, if a license of an agent is suspended or revoked, what real estate activities can the agent perform? Now they're suspended or revoked.
None.
I think that's none. I don't want to waste a whole lot of time on this one.
None.
For sure it's none.
Yeah.
If it's suspended, you can't do anything.
Can't do nothing. And if you revoked, I don't even think you can practice law. I think you lost your license. All right. If an auditor visits a real estate broker's office and demands to see its records, how many years of records are required to be shown?
3.
3? All right. When an auditor visits a real estate office and demands to see its records, the broker must must be able to produce complete file records going back 3 years. All right. What part of agency disclosure statement would an in-company transaction fill out? Now, y'all know what this question is referring to, right? What part of agency disclosure statement would an in-company transaction fill out? Now, the first one is between two different people from two different brokers. The second one is from people with the same brokers. And then the third one is if you represent both parties. So I think it's 2. And I'll show y'all that document at some point. We'll go over it. Let's see if it's that one. It's 2.
It's 2.
Because when you look at the agency disclosure statement, now the agency disclosure statement, what that is that's the document explaining what agent is representing which party, which agent is representing the buyer, which agent is representing the seller. In an ordinary situation, you have what they call a co-broke. or the other, you got a seller's agent, you got a buyer's agent. The co-broke may be from a different company or different brokerage. So sometimes if if I got a listing and Andrea sells my listing, that's an in company because we're the same broker. So that's number 2. All right. The entity or person in charge of determining whether or not the agent is guilty in the case of violating Ohio Real Estate Code is Common Pleas Court, the Ohio Supreme Court, the superintendent. Now these are state questions. I'm gonna try to blow through these real quick because I don't think we got a whole bunch. And I think you passed the state. You passed the state, right, Eda?
Yep, it's the national that's kicking my tail.
Okay, so we're gonna blow through these kind of quick. Now, if we see some national, we should see some national questions on here as well, but these are heavy on state questions. Okay, so the Real Estate Commission, let's talk about that real quick. The Real Estate Commission is appointed. It's a 5-member board, and they're appointed, I believe, by the governor, right? And then the superintendent is hired, and they are in charge of, I believe.
Wait, is that the board that's got 2-3 real estate agents and something?
Yeah, it's a panel of 5 people that's appointed, and like I said, I believe it's by the governor. But if y'all don't know this, this is what I'm trying to do with these questions. What I'm trying to do with these questions is just show you, like, man, just keep it real with yourself. If you don't know what the Ohio State, because it's not the Common Pleas Court, because Common Pleas Court is not an Ohio court. You typically have Common Pleas Court at the county level. Ohio Supreme Court ain't getting involved in that. So that's the top. They're at the top of the food chain. They handle they probably will handle some real estate issues, but these will be way more heavier cases than some of the things. Now, I may make it up to the Supreme Court after the appeals and stuff was exhausted, but I'm pretty sure that these 2 aren't the answer. So,
the first one.
You think it's the first one? I think it's the superintendent. I think it's the superintendent, but we're gonna pick the first one. So what you want to do, Carrie, is you want to write down, know the difference between what the superintendent do and what the Real Estate Commission do.
I knew it was the superintendent only because I saw it on the test.
Okay. Okay. So, but that's how we learn these, right? And but see, look at the answer. You ain't even got to look it up, Carrie. This is the answer. Write this down right here. And when I give you this, go back and take it. And even if you get it right, just remember this, because this is the answer to the question. It's doing the work for you.
Because the commission is in charge of the laws and the whatever, but the superintendent is the punishment part, right?
Right. And this is what it's saying. The Ohio Real Estate Commission is in charge of determining the punishment, while the superintendent is in charge of determining whether or not the agent is guilty. Right. So it's a 2-step process. You go through the superintendent. If you're not guilty, obviously you don't get to the commission. But if you're guilty, then the Real Estate Commission is the 5-member board that administers the punishment. In this case, the question asks who determines whether or not the agent is guilty of violating Ohio Real Estate Code, which is the job of the superintendent. So, but still, and if you want to know a little bit more background on that, Carrie, just just look into it. But that's the answer for that.
Okay, I'll take a picture.
You took a picture?
You went too fast. It's okay. I'll go back and take the test. Okay.
If a real estate, and let me know when you want to take a picture, because that may be even the best way to do it too. And then you can just look at your phone and remember it. If a real estate agent is found guilty of misrepresenting a client and is forced to pay back $20,000 that came from the recovery fund, can they practice real estate again? Now, I'm going to tell you this just for food for thought.
These are state questions. I'm going to see. Let me see.
The misrepresenting to the public is one of the most serious infractions that you can get. It's almost like that's one of the most, because the whole reason the code of ethics is in there is to protect the public. So if you misrepresenting to the public, that's very serious. Now, I don't know if this is worthy of losing the license, because I haven't looked at the code in that level of specificity. I haven't
It's D.
that.
That's the last one.
Okay, that's the last one.
Just
Remember,
gotta pay it.
when y'all answer these questions, remember to read this still, because it's gonna tell you why it's right. Okay. Let's go to the next one. A licensed real estate agent is selling his own property. What must the agent do to comply with Ohio law?
Disclose their real estate agent.
Correct. What? Disclose in any advertisement that the property is being sold. See that is this one. This is like, how could we determine that they were selling it for sale by owner from this question? It's really
say he sells his own property.
Well, I can sell my own property and list it on the MLS with my broker.
But I guess when you sell your own property, it's for sale by owner.
Yeah, I get it. But I think
I would have missed that one.
And this is what I'm saying. So because you just got to disclose that you're an agent. Like, and nothing in there indicated that. I think that it should have said, the question should have been like, a licensed real estate agent is selling his or her own property and not using his broker. Then I know it's a FSBO.
Yeah.
Right. Because one thing I'm going to do is I want the exposure of the MLS, because I don't want to sell it FSBO, because you're not going to get the exposure of the MLS. But we know that they're talking about this. So people would have missed this one. And it's just a bad question to me, because it's not giving you enough information for this to be the answer.
Mm-hmm. It's
just not. So, because in this answer is not wrong. This answer is not wrong. I guess it's just the best answer. We'll keep moving though. If the Ohio Real Estate Commission revokes a broker license, what happens to the license of their agents?
Nothing, right?
They put in the escrow, I think. I believe
they put the agent's license in escrow. Oh, I was thinking you said broker. I'm sorry.
Yes, yeah, revoke broker's license.
Which one y'all think it is?
C. Is it C?
So did you? Let me just ask you this, Ida. I picked C. So, did you see any of these type of questions on the test, on your state test?
Yeah, but okay. I need to. I don't have my glasses on, so I can't really see the questions. I'm just listening to you, which makes it a little harder. I can't find my glasses nowhere. I've been looking. They say they are suspended. Ohio Revised Code states that if the broker license is revoked, all real estate licenses are suspended immediately. Right. So just know that. All right. A consumer guide to agency relationship form must be provided for all of the following except a lake house for a single family, a lake house for a condominium unit, a residential house on a farm, a commercial property.
Commercial property?
All right. Correct. All residential real estate transactions. All right. If a buyer requests a property disclosure form and the seller refuses to provide it, while the buyer already signed an agreement to purchase the home, what rights are available to the buyer? If a buyer requests a property disclosure form, now let's talk to that. That's a property disclosure. So it's the property. What I tell people is it's almost like the property's report card, like what's going on with the property. It's like when you go to the doctor, you got your medical file, everything that's going on with you as a person is in that file. That's kind of what the property disclosure form is. While that person owned the property, he or she may not know what happened before they owned the property, but if they were disclosed something before they owned the property, then they have to disclose it to you as well. Okay, So,
C.
Yep, that's the one. Keep moving through these, man. Any event, which event will not trigger the licensee's obligation to provide a guide of agency relationship? Will not.
The last one. The last one.
This one, you want this one? All right. We got that one right. Remember, when y'all do these, I'm gonna try to blow through these because a lot of these are state questions, and I'm gonna let you handle that one. Now, if it was more people on here, I probably would just go through them, but it's only us three. So let me just make sure. Ain't nobody texting trying to get in. So, all right. So let's keep going. Whenever you pay your agency fees, a portion of those fees goes towards the recovery fund. How much specifically?
20.
10. Take a picture of that. And then you got this here. This is the code that you look up to learn more about that. Let me know when you're ready to go to the next one.
We can go to the next one.
Hold on, what happened? Hold on, y'all, give me a second. Okay. All right. If the listing agent represents both the buyer and seller in the same in the same transaction, this is known as dual agency. Is dual agency legal in Ohio?
Yes.
So it's
The
not.
last one.
Yeah, that's the right one. Real estate agent is selling Ohio property that is owned by a resident in New Mexico. The buyer is a resident of Michigan. In order to perform this transaction, the real estate agent must be licensed in
hold on, let me read. Can I read the question again?
Yeah, go ahead.
I would say B.
B? That's what you say? Hold on,
Yeah.
I'm getting. I think it's Ohio. I think it's in which the state the property is in. No matter where the buyer and seller at, you got to follow the laws in which the state is in.
Okay, so I read it wrong. It would be the last one.
Mm-hmm. Okay, which part of the agency disclosure would a transaction involving two brokers fill out? Remember, that's going to be one. You got the agent. You got two different brokers in that instance. So that's that one. A real estate agent is found guilty of fair housing violation. The agent's broker is not liable, subject to fines as they are liable for the actions of their agent, subject to imprisonment. Okay, we're going to skip that one. Liable for I don't know if anything you can do in real estate, but I mean, there's something you can do in real estate where you can get prison, but typically that's not criminal law, it's civil law. Subject to imprisonment as they are liable for the actions of their agents, liable only if the broker knew of the actions of the agent and did nothing to correct it. Which one's y'all think?
I'm between B and the last one.
I like this one.
Did I say the last one?
Yeah. Which of the following sellers is not required to fill out the Ohio? Which of the following sellers is not required to fill out the Ohio residential property statement? Now remember, this is the property's vitals. It's like its medical folder. And so typically when you're dealing with residential property disclosure forms, if you never occupied it and you don't know the property, then you can't fill it out. Which of the following sellers is not required to fill out the Ohio residential property disclosure statement?
Investors? Or no? Property manager.
All right. It's either banks or property manager. Which one you want to go with?
Property manager.
States. Let's read this. Now, that's just a tricky question. In Ohio, the only parties exempt from property disclosures are parties from estates. Typically, they are deceased. Typically, they are not. They are deceased. So, in other words, if there's an estate, I mean, the person who owns the property is dead. I wouldn't worry about that a whole lot, though. You probably won't see that. In Ohio, a non-licensed individual working for a property management may not. A non-licensed individual working for a property manager may not
show the property. Say not licensed. Property manager can accept rent, they can prepare a lease, and they can prepare.
You think it's show a property?
Yes.
Remember, typically no one can prepare a lease. So take a picture of this. Remember, no one typically can prepare a lease. Now you could.
Is that the legal side?
Yeah. So
I mean,
you can't prepare. Like typically, remember in that question that we asked, I think it was the second question when they were talking about unauthorized practice of law.
Mm-hmm.
Right. You got to think about when you did property management. Did you ever show a property?
Yeah, I was questioning it, but I wasn't thinking like the legal part.
Yeah. So take a picture. Take a picture of that. What items must be clearly displayed in any Ohio real estate broker's office? The broker's license, the Ohio
licensing.
Which one is it?
The last one.
All right. Good job. The commission may ask for additional funds for the recovery fund if it is below. It's $250. I believe it's $250. I think I just saw that in the previous question.
I didn't know that one.
Here, take a picture of it. Keep it in your
Hold on.
And all them recovery fund questions is on there. They're on there. How much you got to put in, all of that stuff.
You hear that?
Yeah.
Okay. All right. Moving along. The canon of ethics require that all real estate agents or brokers treat people honestly and fairly, treat people with honor and dignity, treat all principals with honor and dignity, treat all other real estate agents and brokers as you would principals.
B.
You think which one?
B.
D?
No, B. Right?
I would have picked A, but I'm just I don't care about getting these wrong, right or wrong, because this.
What did I say? Honest? No, that's the right one. I'm sorry. You know I ain't got my glasses on. Honest and fairly. Because it's them two words. I always remember them two words, honestly and fairly.
Okay.
Is this question on the test?
Yeah.
Because I want to say I remember seeing this when I took it a long time ago.
It's definitely on the test. But it's them two words. If you remember honestly and fairly, that's the answer.
Mm-hmm.
Okay.
All right. In Ohio, what is the most important aspect of real estate agency advertisement?
Broker.
Yeah, it's the broker. The broker must be prominent. Typically, you will have the broker's font in a bigger font than even the agent's name because it's the broker. So I'm gonna go there. You good with that, Carrie?
Mm-hmm.
And again, this is the same questions that so when you take it, you get to go at your own pace and, write down anything that you get wrong. In Ohio, which are the following fiduciary duties of a real estate agent? All right. Now, Edith, you came up with a good acronym, old car, right? Now these aren't all of them.
I learned that on YouTube.
Yeah, these aren't all of them. So let's eliminate some. Old car was obedience, loyalty, disclosure, confidentiality, accountability, and what is the R? What is the R? What is the R? Man,
I think it's responsibility. I think it's responsibility.
Responsibility. I go over this stuff all the time, and I just don't. When I see it, I know it. So, accountability, care, ability, and dignity. That's not them. Accountability, demeanor, loyal, and disclosure. That's not them. It is more than 4. So I think it's accountability, confidentiality, loyal, and disclosure, because in this one, you don't have the O, which is obedience. We know that. And then you don't, so it's going to be C. It's going to be C.
The R, reasonable care.
Reasonable care. There you go. That's
reasonable care. That's what it is.
That's exactly what it is. All right. So no, definitely know that. Definitely know your fiduciary responsibilities as an agent. After a second fair housing violation offense, the commission may suspend or revoke a license for any broker or sales agent found guilty for a minimum of, and remember they say may.
6 months.
I like that answer. It's 2 months. So look, take a picture of this. A minimum. See, when I seen a maximum is 6 months. A maximum is 6. See, that's just I didn't read that question right. When I just saw 6 months. So that's a good example, because it says a minimum.
Yeah,
6
but
months,
minimum
I believe, is the maximum. What you say?
I said minimum could be 1, 2, or 3.
Yeah, I didn't read that question right. That's my bad. I'm moving too fast. I'm trying to go through these. If a real estate commission judgments, if any real estate commission judgments are appealed, which court are they first sent to? Small Claims Court, Court of Common Pleas, the Ohio Supreme Court, U.S. Supreme Court. The last 2 definitely. All right.
Common Pleas. It's the Common Pleas, right?
Common Pleas.
It ain't the Supreme Court.
No, it ain't the Supreme Court. It ain't neither one of the Supreme Courts. And Small Claims Courts is like, that's just not. I was gonna skip that one anyway. So here, and again, you can go through these. I'm gonna send y'all the link. Which would cause the real estate agent to lose their license? Ohio State real estate license. Sometimes I'll be cutting these questions short. Which would cause a real estate agent to lose their Ohio real estate license? A minor traffic offense? I don't think so. A violation of the ethics? That's a good selection. A violation of the Board of Realtors? A violation of the Ohio State game warden?
B.
Yeah, I'm gonna go with B. All right. Ohio real estate law promotes
transparency. I guess.
Good
I would say transparency.
Yeah, that was right. A person selling detachable mobile homes in Ohio is required to be licensed as what? Now, a detachable mobile home, what they're making the distinction of is real property and personal property. Because if you can move it, sometimes it's considered personal property. All right. A person selling detachable mobile homes in Ohio is required to be licensed as what? A real estate agent, a real estate broker, a real estate agent or broker. No real estate license is required.
D, because all the other answers are right, the same.
It's the last one.
Good. That's a process of elimination, right? Because now you got a real estate agent, and that's a good, yeah. So, yeah. See, a mobile home is detachable, so it's not considered it is considered personal property, meaning no real estate license is required. If the mobile home was attached to the property, a different story. In this case, no license. In this case, though, no license is required. A mobile home is detachable, so when you can move it, it's personal property. And that goes with anything that's at a property. Really, if it's detachable, easily detachable, it could typically be considered personal property. All right, let's see here. Ashley, a real estate broker, failed to meet the deadline for submitting proof of completion of her required continuing education. Her license is suspended. What happens to any salesperson or agent working under her? We kind of had this question before. A real estate broker.
Everybody's suspended if the broker is suspended.
Mm-hmm. So we're going to go D. We only got 9 more, y'all. Dual agency is forbidden in which case? A real estate agent wants to sell his own house and act as the buyer and the seller's agent. Both the buyer and seller agree to use the same agent, but the buyer is using a VA loan. That's not it. Both the buyer and seller agree to use the same agent, but the agreement is in writing. That's how you're supposed to do it. Both the buyer and seller agree to use the agent, but the seller wants to use a balloon loan.
It's the first one.
All right, I agree. And there's a reason why it's right. Jessica Smalls is a real estate agent working under Hannah Biggs. Hannah has had her broker license suspended and it will be unsuspended next week. Jessica took a listing on Hannah and put the listing up on her website. Which of the following best describes this situation? Jessica is getting ahead of the curve, no harm, no foul. Jessica is allowed to practice since the suspension only lasts 1 more week. Jessica will be punished and suspended too. Hannah will be punished and suspended again.
The last one, I guess.
It's probably this one, because Jessica is a real estate agent working under Hannah Biggs. Hannah has had her broker license suspended. It's a because Hannah might not know Jessica doing this, but I think it's C.
But it's Hannah's job to know. They always say brokers are responsible for the agent.
So you want to pick D?
I think they should have added another.
The wording is weird.
Yeah, the wording weird, because I think the broker is always a part of every transaction. So how would she not know?
Okay, yeah, that you know what? I think it's C, but it could be D. Good job, ladies. See, I would have got that one wrong. I know why. I should have looked at it and read it while I was right. Damn, I'm moving too fast. If a seller is aware of a termite infestation from 20 years ago and informs the agent, what must an agent do? Nothing, since it was from 20 years ago, which means it's past the statute of limitations in Ohio.
It's D. He has to disclose everything.
Right. The agent has to disclose that. Correct. All right. Real estate agent Jimmy John took out a large page ad in a local newspaper. In the ad, Jimmy's name was the same size as his broker. What punishment will Jimmy receive, if any? He will be suspended for 1 month because his name has to be smaller than his broker's. He will be suspended for 3 months because his name has to be smaller than his broker. He will be suspended for 6 months because his name has to be smaller than the broker. Nothing will happen to Jimmy. He is actually following Ohio law.
It's the last one?
I think it's 1 month. I think he'll get suspended, but it ain't that punitive to the point where it's 6 months. Because hell, they violated the Fair Housing Act twice and they said they could a minimum. What do y'all
when they say same size as the broker, what do they mean? Like,
it's simple. If your
the broker's name is supposed to be larger than the most prominent thing on any advertising.
Mm-hmm.
Okay.
So in this case, I just don't think that it's suspended because he actually followed the law. As long as you put the broker's name,
right,
and your name is not bigger than the broker, I think it's. I don't know. I think it's D, but let's see what it is.
Let's see D. Let's see. That's a yeah. I would have got that one wrong because I didn't see where it says the same. Man, it's so. I do it. I'm doing it right now. There was 2 questions that I didn't. It's some distinctions in the question that you got to pay attention to. And it
I'm
says
learning that after this third time. They're not
right.
saying that it's
Right. That's what's up. Yeah. So man, you really gotta pay
I
attention.
think she,
Yeah,
I think her thing went out.
we should be coming back in. Let me see what happened. Hold on one second. She should be coming. Let me minimize this real quick. Let's see when she comes in. And I'm gonna just go over it because I'm gonna go on and keep going until she comes back, because I know she's passed the state exam. So let's keep working on these, and then when she get back, we're gonna pick up on the finance stuff. All right. So Susie was approached by the real estate agent who offered to put her house on the MLS for a flat fee of $595. In addition to the lease listing agreement, the lead disclosure, and the consumer guide to agency relationship. Hold on one second. There she is. Sharon, give me 1 second. Let me let Edith in here. Okay, Edith, something happened.
sorry, y'all.
We good. We almost done with these, so then we go into the next one. What time is
Did I miss one?
No, we didn't. We was just about to go over this one. It says Susie was approached by a real estate agent who offered to put her house on the MLS for a flat fee of $595. In addition to the listing agreement, the lead disclosure, and the consumer guide to agency relationship, what other form does Susie need to sign? The statement of duties file, a waiver of duty statement, hazardous waste agreement, the Ohio revisional code statement. I thought they was gonna say the residential property disclosures.
I don't know this answer. What the hell?
I
don't think it's hazardous waste. It's not hazardous waste. It's not waiver of duties. Or is it? Because she only listing it, or she? I don't know. Let's just pick one. Let's see what happens.
Which one y'all think we should pick?
I don't know.
Wait, let me read the question one more time. Let's see.
Damn, they ain't even do the property disclosure form.
Consumer guide.
It wouldn't be hazardous.
I think it might be. I think it might be duties, right?
The statement of duties file.
Or the third.
It's not hazardous waste. It's not the Ohio revision code statement. I don't know. Just let's see what happens.
The waiver of duties.
Let's do that one. All right, let's keep it moving. We got that one right. If y'all see that on the Texas waiver of duties statement. The Ohio Real Estate Commission notes in its quarterly newsletter, if an agent has had his or her license suspended and has been fined, this is known as license reprisal, public notice, public
notice.
Either say public notice. It's public reprimand, but it's public something. Take a picture.
Damn, I thought it was notice.
So it says public license notice of suspension and fines. Public reprimand, public notice. You see, man, that's so
it's almost like it's the same, but
it's so petty. It's so petty because a public reprimand is a public notice.
Yeah, because my thing is, if you put in a public notice, you're still embarrassing. It's still the same thing as a reprimand. What's the difference?
A public notice is a higher form of a public reprimand, because a public notice could be anything. Which what I mean is, under a public notice would be a public reprimand. You know, whatever. But just know it's public reprimand on that one. The entity or person who holds hearings to determine the punishment for a real estate agent who has violated the Ohio Real Estate Code is we talked about this, it's not the Court of Common Pleas, right? It's not Ohio Supreme Court. It's either a commission or the superintendent.
Is it Ohio Real Estate? Commission?
Let's see. Correct. All right, we got 3 more, I think. In Ohio, net leases and leases typically that consist of what or which factors? In Ohio, net leases are leases typically that consist of what factors? Taxes and insurance, taxes and maintenance. The last one? Okay, keep it moving. I knew it was the last when I looked down and seen it. The purpose of the Ohio Recovery Fund is to enable sellers to recover lost money on sales agreement. Widows to gain money if their spouse passed away. That wasn't funny, but people to get recourse of uncollected judgments against licensees. Sellers to which one?
Would be it's either the last one or the third one.
Which one you think? I think it's either the last one or the first one.
Oh.
I'm gonna go with the last one though. What? You was right, Carrie.
I
need to take a picture of that one. Okay. So this means that a judgment means that they went to court and they got a judgment put on their license.
Mm-hmm.
So that's
because I thought the recovery fund protects the agent for I guess certain penalties, but I was just
that's a good distinction to know too. You're right. That's a good one. Who appoints the members of the Ohio Real Estate Commission? I kind of talked about this one. The current president 6 months after they're elected by Congress. The head of the Federal Real Estate Commission, the Ohio Department of Commerce, the Ohio State elected governor.
The last one?
Right. All right, so I'm gonna send this out to y'all.
Did that say governor?
Yes, the governor.
Oh, that's it. Yeah, that's it.
All right, well, I'll let y'all know what we did there. Okay, so now let me go into the finance section of what I was, and we got a 72.5 on that, so we would have passed the state. Even with all those tricky questions, we would have passed the state test on that. So good job, y'all, on that. Now I want to go into the next thing I want to do is I want to show y'all what I did, and I'm gonna go over these words. This is finance, and I'm gonna build these definitions. I'm gonna go over this one more time, and this right here is something that I had started to do definitions on the spreadsheet for y'all about all of the different finance words. Hold up. Let me bring the sheet up. But we got a 72.5, so I don't care about none of them questions that I got wrong at that point. I mean, you should care, but hell, you get 100 or you get a 72.5, you still call the agent. All right, so this is the one I wanted to share with y'all. Let me bring this up.
It's 20 questions on the state, right? Or did they change it?
No, I think it's it ain't
20. Or 40.
I think it's 40. It's 40.
And national 40. Is 80.
National 80. Yep, it's 40. I think you got to get 28 of the 40 right.
Yeah, because I missed it by 8.
Yeah. So yeah, that you got to get 28 of the 40 right. So, and it may be a little different too since the last time you took it. I mean, it was all gonna be the same questions though. Oh man. All right, give me 1 second, y'all. I'm trying to locate this dot. I'm gonna just go over this these words that I got on this sheet, and we gon' hold up. And I'm gonna be sending out a lot of stuff, man. So a lot of more stuff here. And Edith, before I close my computer, I'm gonna send you the rest of I think you answered 60 of those questions, or you sent me what you left off at, right? So I just gotta finish yours. Hold on 1 second, July 2nd.
I think you put the answers in our email. I just printed them while we was talking.
Okay. Let me see here.
I went through all our emails to get caught up.
Okay.
I got a house full of kids over here. I gotta cook them breakfast.
Okay. Man, where is this thing? And I hate when it's like this. Give me a second. So wasn't that one?
It's so crazy because yesterday on the plane, I was doing my Hondros book, finance book.
Mm-hmm.
Oh my God. If I had to just done that from the beginning and answer all the questions at the end, I'd have passed on the first time.
Right. And let me see what this is here. Okay. I think this is it here. Give me a second. Okay, yeah, this is it. Okay, so let me share this with y'all real quick. All right. All right, so this is how I started this. And what I was trying to do with this, and I don't know if y'all can see that. Let me try to make it a little bigger. But what this is I went down, this is a sheet, and a lot of the stuff in yellow is stuff that I definitely would need to know in finance. So I just started with all the A words, and I tried to make y'all like real concise, really simple definitions of these words. Acceptance, the act of agreeing, consenting to terms of an offer establishing the meeting of the minds. Right, that's acceptance. ADA, American Disabilities Act, reasonable accommodation. So what I'm doing is I'm defining it and also putting in there some of the words that you'll probably see that'll trigger that. Reasonable accommodations, that's what this, so if you get a question about ADA and they say something like, if you're leasing a property to a person with disabilities, what must you do? And one of the answers might be provide reasonable accommodations. And this is just a short definition that you can put on your note card, or you can just print this out and keep this with you. All right. Addendum, additional, and I gotta put another D in there. Additional pages of material that are added to become part of a contract. Agency, a relationship between the agent and principal with an agreement to perform certain duties. That's what agent, a relationship between an agent and a principal with an agreement to perform certain duties. Agency disclosure states that the agent is acting on behalf and in the best interest of their client, of the client. What is an agent? Someone who acts on the behalf of and in the best interest of their client. Assignment, a transfer by a person of that person's right under a contract, right? So that's an agent. That's assignment. Attorney in fact, one who is authorized by another to perform certain duties on their behalf. Breach of contract, failure of duty when agreed to in a contract either by omission or commission. Failure of a duty when agreed to in a contract either by omission and commission. Broker, a person employed for a fee to carry on any of the activities that they are licensed for. That's what a broker is. CC&Rs, covenants, condition, and restrictions. Typically, you'll find those in like bylaws, condominiums, or in deeds. A client, a party who has assigned I don't know why this is so small. Let me increase that. Why is that so small, man? Let me see here. Okay. A party who has signed an agreement with an agent, and this agreement creates a fiduciary relationship. Commission, an agent's compensation for performing duties of the agency. Concessions, a benefit or discount offered by the buyer or seller to help sell a home and close a deal. Consideration, anything given or promised by a party to induce another to enter into a contract. Contract executed. Why is this one so small? Let me increase that one to 10. All right. Contract executed. A contract in which both parties have performed, and that should be there, their contractual obligations and signed contract. Contract unilateral, when one party promises to do something if the other party performs a certain act. Contract, a legal binding document that has to have 4 elements. 1, parties capable of contracting. 2, consent of the parties, a lawful object, and consideration. That's what a contract consists of, those 4 elements. So you have to have consideration, a lawful object, consent of the parties, and the parties got to be capable of contracting. Like you probably won't be able to get into a contract with a minor. All right, so these are brokerage. These are going to be in your brokerage question, in the brokerage section. I'd say finance. So these are things that in the brokerage section that you're going to want to know. General agency, prorations. I wrote definitions for those. All right, and I'm going to get rid of some of these here, but other things that you want to know on here, and I'm going to actually, let me get rid of this section right here. This easement and variation. Let me cut that out of there. No, put this way down here somewhere because that shouldn't be there. And let me get rid of this extra space here. And then I'm gonna just go into finance real quick, and we're gonna talk about that real quick. Did you see anything on the test about 55 and 62 plus communities, or how to treat those either? Under like fair housing?
I keep forgetting to unmute. Did I see what?
Okay, so down here in this section here, it says in order to qualify for the Fair Housing Act, housing for older persons, there's exemptions for at least 80% of the units. Did you hear anything about like you got to set aside like 80% of the units if a person's under 55 or anything?
No.
You didn't see any of that? Okay. All right. So here, let me get off of that. And here, let me go here. So this is VA, y'all. So obviously you want to know for VA who's eligible for it. right? But what is a VA loan? A VA loan is a mortgage loan that's backed by the Department of Veteran Affairs, or the VA, for those who served or are presently serving in the U.S. military. While the VA does not lend money for VA loans, it backs loans by private lenders, banks, savings and loans, or mortgage companies to veterans, active military personnel, and military spouses who qualify. All right. There are three types of VA loans: purchase loans, interest rate reduction, and refinance loans. And it says they're also referred to IRRL, and cash out refinance loans. So they can refinance, they can reduce the interest rate, and then they can purchase a house. Those are the three different types of loans. There are many benefits to a VA loan, but the biggest benefit is that there's no down payment. No down payment is needed to purchase a home. That's a big one. This can make home ownership a reality for active military or veterans who might otherwise not be able to afford it, who is eligible. VA loans are designed, and I sent y'all this, so just know this: VA loans are designed for military personnel, veterans, and military families. The list of those who are eligible for this home buying military benefit include veterans, people that have served as out of the military, active duty personnel, people that's in it, reserve members, if you're in the reserves, National Guard members, some surviving spouses. You must also have suitable credit, sufficient income, and a valid certificate of eligibility. And you must use the home for your own personal occupancy. All right. So what are the benefits? Here are the benefits. A VA loan program offers some of the most attractive and flexible loan benefits available, right? And they are exclusively for military personnel, veterans, and their families. Perhaps the two biggest benefits that make these loans more affordable than a typical loan are that the buyer typically does not need to make a down payment, and therefore no private mortgage insurance. And there is no private mortgage insurance required. Let's take a step back. Let's look at the different types. Now, this is a real attractive loan. If you so lucky to get a VA loan, if they get approved, it's a wrap. You're gonna sell them a house. So when you get a person that's a VA that has a VA loan, they don't have no down payment, they don't have no primary mortgage insurance, and typically, man, those properties are priced out. We're gonna go over some of the drawbacks of VA loans. One of them is that the seller has to pay certain expenses. They also are not required to have any earnest money down. So no down payment required, negotiable and competitive interest rates, the ability to finance VA funding fee, plus reduced funding fees with a down payment of at least 5% in exemption. So read over that, understand that. VA rules limit the amount that you can be charged for closing. So that's another good one. That's another good one because some of these closing costs get ridiculous on some of these loans. Closing costs are comparable with other financing types and may be lower. Closing costs may be paid by the seller. No private mortgage insurance premiums are required. So what that private mortgage insurance is typically a lender is going to require you to have a 20% equity position in the property before you are not required to have primary mortgage insurance. So off the bat, VA people don't have to have that. That mortgage insurance makes your payment a little bit higher because you're required to carry that, right? And so with VA loans, they don't have that. And so there's no equity position needed. Like if you go a FHA loan, which we'll go over real quick, you have to have 3.5% down. And so you got to pay PMI all the way until you get an equity position of 20%, meaning that if a house is worth 100,000 and you only put a 3.5% payment down, it's safe to say that you still have to get to a point where $16,500 is paid if the house value stays the same. If it stays the same over the loan, when you put 3.5% down, you got to get 16.5% more of equity position before you can drop that primary mortgage insurance. And what the way that you typically would do it is, once you get to a point where you feel as though you've achieved 20% equity position, you would you would talk to your lender, and then they would do an appraisal, and then they would determine what your loan to value is at that point. An assumable mortgage, so someone can assume that mortgage. The right to prepay your mortgage without penalty. So if you want to try to pay your property off faster, you can make principal payments to pay it off earlier. For homes inspected by VA during construction, a warranty from the builder and assistance from VA to obtain cooperation of builder. How is that a benefit though? For homes inspected by VA during construction, a warranty from the builder and assistance. So I guess that's just guaranteeing the quality of the home. VA assistance to veteran borrowers in default due to temporary financial difficulty. So if you a veteran and you can't pay your mortgage, the VA will come in and help you get through that. And then this is just, how can a VA personnel get a loan? Definitely know that. Find how to find a VA lender. I don't know if that's going to be on the test, but that's just going over the VA loan real quick. I think the most important thing is to know who's eligible for it for the test, and perhaps some of the benefits, some of these here. So when you're going over that, you want to know some of these things here, and definitely know who's eligible for a VA loan. Going to the FHA. All right, what is an FHA loan? FHA loan is a mortgage that's insured by the Federal Housing Administration. That might be a question on there. It may ask you, what's the Federal Housing Administration? It's an administration and administer things. It's not an agency. All right, so that's the first thing I want to make out. FHA is the acronym for Federal Housing Administration. They are popular, especially among first-time home buyers. Now, let me give you a little bit of background about this, right? And this is just gained real quick at when you become an agent, and just some of the things to think about FHA. Now, FHA is an attractive thing for borrowers, not so much for sellers, because FHA, the first thing I want to do is just describe the secondary mortgage market, because it's so interconnected with FHA loans. So just to give you a little bit of history, and the reason I'm doing this is it should help you answer questions about the secondary mortgage market. So back in the day, I ain't gonna take y'all too far back, but back in the day, when there was no FHA loans, people really had to have a substantial down payment, maybe almost up to 35 to 50% to even buy a house. Now I'm talking way back. I'm talking back in the 20s and 30s. So there was no FHA. There were no loans where people could put 3.5% down and then get into a loan and then make payments. And at that point in time, typically it wasn't amortized loans either. And y'all know that amortized loans means the same payment throughout the life of the loan. So if you got a 20-year mortgage, it's going to be for 240 months, it's going to be the same payment. If you got a 30-year loan, that's going to be 360 months, that's going to be the same payment for 360 months. Well, back in the day, they didn't have those, right? You had to have 35 to 50% down to even buy a house. And then a bank might give you a loan for 10 years, and then there might be a balloon payment at the end of that loan. So when the FHA was created, they, in a sense, with FHA, helped create the secondary mortgage market. Now, what is the secondary mortgage market? The secondary mortgage market includes Fannie Mae and Freddie Mac. They insure or guarantee the loans made by the FHA. So the reason why they insure them is because what happens is, and to make this real short, let me first tell you where you would go, where your clients would go to get an FHA loan. They don't go to the FHA. They don't go to the FHA in Washington or wherever it's located and say, hey, I want to get a loan. What they do is there's banks and thrifts and financial institutions that are able to do FHA loans. So you might, whatever bank you go to, if you want to get a home loan, you ask them, hey, do y'all do FHA loans? And that bank has to be approved by the Federal Housing Administration to do loans, because there's a criteria that these banks have to follow to do FHA loans, right? And so when you're explaining the secondary mortgage market, really what FHA is doing is they're authorizing these financial institutions to make FHA loans. When they lend on the property, what they're doing is it's going to be a higher level of criteria, debt to income ratios. It's going to be real rigid, and they got to follow it, because what FHA is going to do is they're going to take a bunch of mortgages, your mortgage, Edith, my mortgage, Carrie's mortgage, everybody in the agent success training's mortgage. And then what they're going to do is they're going to package them together and they're going to sell them to investors. That's the secondary mortgage market, right? And so so Fannie Mae and Freddie, and you can even say Ginnie Mae, they're going to guarantee that those mortgages are going to be, those investors are going to get their money on those mortgages. So they got to make sure that you're solid as a borrower. That's why that criteria is so rigid. So the first thing they're going to do is say, you got to have this credit score, you got to have this debt to income ratio, you can't have this in terms of your credit, stuff on your credit, and you got to put 3.5% into the transaction, right? This is explaining the secondary mortgage market for the borrower. Now there's another piece to this pie. The other piece is the property, right? So now the property got to be in sound condition. So what happens is they have appraisers that are certified to do FHA appraisals. A regular appraiser can't do an FHA appraisal. That appraiser has to go about getting certified to do FHA appraisals, because FHA is going to send their appraisers in there to look at the property similarly to the way that they looked at you as a borrower, right? So not only do they want you to be solid and follow a certain criteria that's a bit more rigid than if you're going conventional, and if you could go in cash, that none of this even matters. So now they're going to go to the property and they're going to say at the property, I need this property, all these things got to be in place. And if they're not, then we ain't lending on it. Because guess what? If we want our borrowers to be paying the mortgage, not fixing the furnace or fixing a water heater or fixing a roof or fixing, stuff around a house that are high ticket items. So when they go there, those FHA appraisers have a different appraisal form that they fill out, right? Or they may, or they also may be required to put a lot more wording into the appraisal, right? And actually it is a different form, because what happens is, if I go do an appraisal for an FHA property, I'm looking at a lot more things in terms of condition. So say for instance, I go on the property and I see, oh man, this furnace is real old, and I might have did a little inspection of the ductwork or something like that, and I seen that there's some issues. So I'm not saying the FHA saying they're not going to lend on it, but what they're saying is for us to lend on it, the seller got to fix this, and we're not passing it off to the buyer. Or if there's a leaky water heater in the property, the FHA appraiser is going to flag that water heater. It's not saying FHA ain't going to lend on it. It's just saying, Mr. Seller, Mrs. Seller, you got to fix this before we lend on this. All right. So the two main parts of an FHA loan is the borrower and the seller. The borrower and the property. And the main reason is because in the secondary mortgage market, they about to ship these off to investors. They're going to pull all our mortgages together and they're going to ship them to investors. Those investors need to have it guaranteed. So, and then they say, Mr. and Mrs. Investor, we're going to guarantee you that you're going to make your money on these loans, right? So for them to do that, FHA got to make sure the property and the borrower are solid. I'm going to go into a little bit more. It's a little bit off the path. Where we got into trouble is they was giving FHA loans. This is years ago, about 10 years ago. They was giving FHA loans to anybody. They didn't have solid, they were meeting the criteria, but man, some of these lending institutions weren't doing and vetting the borrowers the way that they should have been vetting them. And somehow people that shouldn't have been owning homes got into these homes. Furthermore, the appraisers, in a sense, stopped appraising those properties with such a great detail and a fine-tooth comb when they went into them. So that allowed a lot of people that weren't supposed to be owning homes to get into properties, right? And so those people start losing their jobs. They start losing their jobs, excuse me. They start losing their jobs. The property were in poor condition. A lot of them weren't in condition. So hell, if you need a roof and your roof is leaking, you ain't paying that mortgage. You got to get that roof fixed. If you need a new furnace in the Cleveland winter, you got to get that furnace fixed. So you might miss a couple mortgage payments and then you default. And so it's paramount that the person, the borrower is solid, not only the borrower, the property. Now let me fast forward that to today's market. People ain't about to be dealing with no FHA loan because they know a lot of times when I go to show a property and I see that because when you go and list a property, remember now, let's go back to what I told y'all before and how you purchase a property in that land installment question. You can purchase it for cash, you can purchase it on a conventional loan, you could use an FHA loan, or you could use a VA loan, right? So right off the bat, VA just like FHA. The borrower got to be solid, the property got to be solid, maybe even more, because the VA requires a termite inspection. So let me tie this all in to that. So if you know you got a questionable property and you know this thing might not pass FHA or VA, you're not going to allow anybody that want to go FHA or VA to even look at the property. So when you're looking at listings and active listings now, a lot of them are saying cash conventional. Right there, that's a red flag in most instances that there's condition issues at the property. Because if my house is solid, I don't care if, go FHA. It don't matter to me. Now, another drawback to FHA is they typically take longer to close. Typically on the FHA loan, you're going to do a 30 to 45 day close window, but whereas a conventional product, you might just be at a 30-day window. That's another drawback that sellers don't want to deal with, right? And so right now with this market so hot, I ain't about to be dealing with no FHA or VA loans. I need cash or conventional. And I'm about to get 20 offers on this property. And as soon as I get an offer that's FHA or VA, a lot of times what the sellers are doing is, even if the property is sound, they're taking those VA loans and FHA loans and setting them to the side. They're looking at their cash deals and conventional deals, because those are less strenuous types of closing and less requirements of the borrower and the property, right? This is all in the secondary mortgage market, right? All of this is explaining that, right? If I got cash, cash is king. I might accept an offer that's $10,000 less than to have to deal with a property, deal with somebody that's FHA or VA, or even conventional for that matter, right? I might got a good equity position. I bought the property, right? I'm already getting a premium on my sale. I want this to close immediately. When you're dealing with cash, you're not dealing with an appraisal at all. Now, the person that's paying cash might want to get an appraisal, but that's not a contingency in the deal, right? And so the secondary mortgage market is so important to finance, because what they do, and when I said everybody in the agent success training, they're going to pool our mortgages together, I'm talking they pooling thousands and thousands of mortgages together, and they're selling them to these big investment REITs, real estate investment trusts, or investors that buy thousands of these things. And for Fannie Mae and Freddie Mac is going to guarantee that those mortgages get paid. Now, let's talk about default. When something defaults, Fannie Mae and Freddie and Ginnie, they gotta insure them. They gotta give those investors that money, right? And so what I just explained in a very, very short amount of time is the secondary mortgage market. FHA was created, right? FHA was created and it started the secondary mortgage market because you didn't have this before. And FHA, I believe, was established in 1927. And when they established it, now this is where your fair housing comes in. When they established it, a lot of the underwriting guidelines were very, very prejudiced. And they did not lend to areas where They did not lend to areas where they didn't lend to areas where Black people were. I'm gonna just be frank. They didn't lend to areas where the housing stock was very old. And so it was a lot of discrimination. And the fact that these loans, these very, very attractive loans, you mean to tell me I can get a brand new house and all I got to do is put 3.5% down? So now, instead of buying a house in an urbanized community, Cleveland, the older central cities, Cleveland, Detroit, Toledo, Youngstown, they were building houses out in South Euclid and Parma and all these other first ring suburbs. Now I'm talking about, I'm in the 30s and 40s and 50s, where they are building new houses. So instead of me buying a house in the urban ring, I'm gonna now go out to Parma, like I said, Euclid. That's why when you look at those communities, most of the houses are built in 1940, 1950s, right? And so they were building brand new houses in those communities. And so the disinvestment of the urban communities occurred in your bigger central cities, right? And also with that became what we know as white flight, right? Where white people were leaving, Caucasian people were leaving, they were leaving the central city and going out to the first ring suburbs, Parma, Euclid, all of South Euclid, a lot of these places where you see the housing stock being 1950, Lyndhurst, where you see the housing stock 1940, 1950, 1960s. And then the second ring started where you got your Solons, you got your, some of those further ring, you got Broadview Heights and all of those, Strongsville and all of those cities. And you'll see some of those cities where those houses were built in that 70s and 80s and 90s, right? But what happened when the FHA was created, it really enabled or facilitated the disinvestment of the essential cities. And they also discriminated against people, right? That's where redlining, that's where blockbusting, that's where steering and all of those things came in. So FHA and fair housing is tied in, is forever linked, because with the creation of FHA loans, these very, very attractive loans where, remember, you had to put 30 to 50% down. So bringing that into the test, now you understand the secondary mortgage market. Secondary mortgage market was created because of FHA and VA loans, period. Right? And so what they do, now what they do is they pool those mortgages together. Why do they sell them to investors? Because they want those savings and loan banks to keep making loans. So when they sell them to investors, that money comes back into the system. So now banks can keep making loans, and we had got up to a point where I think it was over 70% owner occupancy in the United States. That's too high. I don't know 70% of my friends that should be capable of owning a house, let alone in the nation. So once we got so high, that meant that there was a lot of bad loans out there. That meant there was a lot of bad loans out there. And that's when you start to see foreclosure crisis and people not able to pay their mortgages. Because not only did they lose their job, now the house need to be fixed. And so that is the secondary mortgage market. And what's tied to it is FHA. And what's also tied to it is all of those loans that are amortized over 30 years or 20 years, because ordinarily back in the day, you couldn't get those type of loans. So there's a lot more to that. And if you want to know more about that, just Google what is the secondary mortgage market, and you'll get videos upon videos upon videos that explains the secondary mortgage market. But in a sense, what that is it's a recycle. It's how you recycle the money back into the system. Banks all got a certain amount of money that they can lend. And if they keep lending it and it never comes back in the system, at some point they got to stop. So the secondary mortgage market allows for these lending institutions, these thrifts, these mortgage banks to replenish their monies by packaging these mortgages together, and then selling those mortgages to investors. When the investors buy them, that money comes right back in the system, and they just keep making loans. But the FHA requirements have to be met, and the house has to be met. And so no Fannie Mae, Know what Fannie and Freddie Mac does. Ginnie Mae is also in there as well. Know what an amortized loan is. All right. Know what an adjustable rate mortgage is. An adjustable, as soon as you hear adjustable rate mortgage, you know it's not an amortized loan, because when the rate adjusts, the payments are different. You might see that on the test. If you hear balloon payment, you know it's not an amortized loan, because on a balloon payment, that's a very, very high last payment. That's higher than the other payments. So when you hear these things, you know that it's not an amortized loan. And you know for sure it probably is not an FHA loan, right? So here are some of the other requirements of the FHA loan. These are some of the things that you need to know. These are the requirements that the bank has to follow. For a borrower interested in buying a home with an FHA loan with a low down payment of 3.5%, applicants must have a minimum FICO score of 580 to qualify. That's a very low score. However, having a credit score that's lower than 580 doesn't necessarily exclude you from FHA loan eligibility. You just need to have a minimum down payment of 10%. So the lower the score, the higher the down payment. The credit score and down payment amounts are just two of the requirements of FHA loans. Here's a complete list of loan requirements, which are set by the Federal Housing Authority. Borrowers must have a steady employment history or work for the same employer for the last 2 years. So a 2-year requirement, right? So you may be having a conversation with a client that's potentially got challenged credit, but they've been at their job for 10 years and they got a 600. Well, they probably would qualify for an FHA loan, at least by that first bullet point. Borrowers must have a valid Social Security number, lawful residency in U.S., and be of legal age to sign a mortgage in your state. Borrowers must pay a minimum down payment of 3.5%. The money can be gifted by a family member. So a lot of times this money needs to be seasoned too. So if you know your person that you're working with ain't got no money in the bank, tell them to go ahead and borrow that money from mom or dad and put that money in the bank immediately, because sometimes it has to be in a bank account for a certain amount of time. I'm not saying that that's a requirement, but what I'm saying is that would be smart, because that may be a requirement from a lender to see that that money's been in there. You don't want to be getting ready to get a loan and then mom give you the money or dad give you the money and you put it in the day before you about to close. You probably want to have that money in the bank well before you get ready to close, even perhaps before you even write a contract. New FHA loans are only available for primary resident occupancy. Now, I think you like, if you're going to occupy 2 family, you one of the units. I think they'll go up to 4 suiters. You got to occupy one of those units. Borrowers must have a property appraisal from an FHA approved appraisal. I just said that, and I told you why. Because if the buyer is spending their money fixing a damn house, how are they going to be able to pay the mortgage, right? So those appraisals are rigorous, and a lot of people run from them appraisals. At least in the past they did. Now they may have loosened the criteria a little bit for the appraisals, because again, if the appraisals are too rigorous, then the FHA ain't going to be doing loans, and they can't sell those properties off to the investors. It had gotten to the point where they needed to keep feeding these investment REITs and stuff these mortgages. So they loosened the criteria. And when they loosened the criteria, what happened is people started defaulting. Home ownership raised to the most in history, because they started loosening the plan with that criteria, with the house on the appraisal. And even sometimes with they started getting more people that was at 580. 580 is a very bad credit score, by the way. Borrower's front end ratio. Now this is probably talking about the debt to income ratio. Mortgage payment plus HOA fees, property taxes, mortgage insurance, homeowners insurance needs to be at least 31% of their gross income typically. You may be able to get approved with as high as 40%. Here, let me go up here. Your lender will require you to provide justification as to why you believe the mortgage presents acceptable risk. The lender must include any compensating factors used for a loan approval. So this is a very, very good sheet for y'all to know. I want to go back here real quick. Let's talk about this stuff here. Mortgage payment plus. So now let's talk about some of the stuff that we go over in the math and why they want you to know this in math. Well, property taxes is a part of the payment. So you want to be able to figure out, you know, how property taxes are calculated. That's why they actually do stuff on the test, right? So that's something that's in here. It's part of the payment. You got the acronym PITI, principal, interest, taxes, and insurance. Okay, the borrower's back end ratio, mortgage plus all monthly debt, i.e. credit card payments, student loans. When y'all get a client, and they got a pre-approval in their hands, and I ain't talking about pre-qualified, I'm talking about a bona fide pre-approval. You tell them, do not do nothing with your credit until you purchase this house. Because my son's mother was about to buy a house, and she went out and bought a car. Before she bought the car, she was approved for like a $300,000 loan. When she bought the car, she went all the way down to $125,000. And I'm like, why did you, like, I can't do nothing with $125,000 now. You went and got the car you wanted. Why didn't you wait to get the house, then the car? And that was somebody that knew me. I'm in real estate. They know me, didn't even ask me if she should go and buy a car. And I would have told her, hell no. I would have told her, don't even use your credit card. Don't do nothing, because on the back end, they're looking at credit card payments, car payments, student loans, etc. All of those things that when you check somebody's credit, you know, if you got a finger HUD account, they looking at that. If you got all these different accounts that may not even be credit cards, they looking at that on the back end. That needs to be less than 43% of the gross income. We're gonna do some calculations on this too. You may be able to get approved with as high as 50%. Your lender will require you to provide a justification as to why you believe the mortgage presents an acceptable risk. The lender must include any compensating factors used for the loan. All right. Borrowers must have a minimum credit score of 580 for maximum financing with a down payment of 3.5%. That sounds to be redundant. I thought that was up there in the above. Borrowers must have a minimum credit score of 500 to 579. So these are just some more bullet points. All right. And here's some of the benefits. Let's read this about this mortgage insurance, right? You knew there had to be a catch, and here it is. Because FHA loans does not have a strict standards for, because FHA loans do not have a strict standards of a conventional loan, which what they're talking about is the down payment. Conventional loans, typically you're gonna be putting down 10, 20%. It requires two kinds of mortgage insurance premiums. One is paid in full, which is the homeowner's insurance. Let me see what else is important here. So there's the appraisal. This is all the stuff that we were talking about. And here's the calculation right here, right? Upfront mortgage insurance, appropriately named. This is a one-time upfront monthly premium payment, which means the borrowers will pay a premium of 1.75% of the home loan, regardless of their credit score. So they give you that example there. All right. And then this is what I was telling you. The duration of your annual MIP will depend on the amortization term and LTV ratio on your loan origination date. All right. So this is some of that information here. How you get an FHA loan, what are the interest rates? All of that stuff is in this document. And so that's that. I sent that to everybody. I'm gonna make this video a part. So just a part of the YouTube channel. But if you understand the secondary mortgage market, there's no doubt in my mind that you'll pass the finance section of the test, period. Because a lot of that stuff is gonna be probably dealing with the secondary mortgage market and those finance definitions that we had that I was sending out. Let me real quick. All right. So Edith, if you remember when we I was sending you definitions, it was just you two. And then so what I'm you remember those words?
You remember those words?
Yeah, you talking about when we was doing definitions?
Yeah, we had all
of
so it was acceleration adjustable rate mortgage, alienation.
Okay, real quick. Acceleration clause is when they want the money up front based on the sale of the home or based on default.
Yeah, an acceleration
clause.
I don't know why we echo.
Hold on one
second.
It's on my home speaker because I was in the shower.
Oh, okay. All right, so what the acceleration clause, yeah, that was those definitions that I read. So here, I'm gonna give you a question about acceleration clause real quick. I wrote some questions about this. So hold on, I'm gonna read a question about it. All right, so I'm not gonna, I can't find it. I ain't about to spend no time looking for it, but it's the lender's ability to accelerate the loan, typically in case of a default, right? So I'll give you an example. Yeah, hold on, I might be able to find a question right here. Hold on one second.
Then alienation clause is when you got to sell the property, right?
Yeah, alienation. Know the difference between alienation and alienation clause, because we went over that yesterday and Andrea just sent that video out. So that's a good video to watch. Both of y'all watch that video because we went over alienation and alienation clause, and they're different. When you hear alienation clause, really what you want to do is think about a mortgage. As soon as you hear clause in that, think about a lender and a mortgage. Whereas an alienation is the right for somebody to just transfer the property. So hold on, let me deal with the acceleration clause here real quick. All right. Yeah, I'm gonna give you the exact, since these are definitions that we had went over. And so it just pretty much in a term in a loan agreement that requires the borrower to pay off the loan immediately under certain conditions. So say for instance, the lender finds out that you're doing something at the property that's against, say for instance, local laws. You know, they can accept, and that violates the agreement. They can accelerate that mortgage, that payment of that mortgage. And like that's if you breach different terms in the contract or the loan agreement, right? That puts the lender in a position to where they're at risk. Okay, and there's different situations that will accelerate that loan. Now, another thing that you want to know is what they call a due on sale clause as well. Now, a due on sale clause is a little bit different. That just says the lender want their money back if you sell it. Right, the whole loan is due on the sale. Like they saying that you ain't about to sell this property and then still keep paying me this mortgage. Soon as you sell it, I want all my money. And those due on sale and acceleration clauses are typically found in mortgages. Now, when you're talking about alienation clause, and I'm gonna give you this straight out of the thing that we did. It gives as soon as you hear alienation clause, think lender, mortgage. It gives the mortgage lender the right to request the full and immediate payment of the loan, including principal and interest, when the borrower sells or transfers their property. Now, alienation clause is typically called a due on sale clause as well. Those are in a sense synonymous. I'm gonna read you what a due on sale clause is. A due on sale clause and alienation clause is also known as a due on sale clause. I like due on sale better than alienation because it kind of is in that word. Due on sale alienation. is a real estate agreement that requires the borrower to pay the remaining of their mortgage immediately during the sale or transfer of the property and before the new buyer can take ownership. Alienation and due on sale are synonymous. All right, now let's look at what alienation is. And what I would recommend y'all do with this is do alienation versus alienation clause. And know the difference, because alienation just means that you are giving something to somebody. Okay, so that would be something that I would write down. So alienation, the difference between alienation and alienation clause. Let me get to it. So alienation is the process of the property owner voluntarily giving up or selling the title of their property to another party. Alienation clause is something typically in a mortgage, which allows the lender to get their money back when you do that. So know the difference between those two. All right. And so I'm about to email y'all the test questions for last week's videos when I get off of here. And again, it's going to be on gross rent multiplier. It's going to be on seller net proceed, and it's going to be on commission. This week, we're going to go heavy with finance questions, and we're going to do, with the finance questions, we're going to be working on taxes, how to calculate a tax bill, and we're going to be working on how to determine what how taxes should be paid at escrow by the seller, and accounting for that piece of the seller net proceeds. Because you got the seller net proceeds, you got all these different things that go onto the seller net proceeds, and taxes, the payment proration of taxes is one of the things that is handled on the seller net proceeds. So I'm gonna go over that, and then I'll be sending out. I'm gonna send y'all these questions like immediately, as soon as we get off this. And so y'all got any questions before we conclude?
Is it acceleration clause versus alienation? Because you said alienation twice.
So there's a definition called alienation, right? And then there's also a definition called alienation clause. Know the difference between those two.
Okay.
And if you watch, literally, I swear, that is covered on the first 5 minutes of the video that we did yesterday for yesterday's class, because there's questions that Andrea asks on that. So I would recommend, she sent out the video because I got it earlier today, and she sent it out to the group. So we went over national questions yesterday on that with Andrea, and we all read questions. I think it was 3 or 4 of us on there, and we read questions from the national portion, and she was covering brokerage questions. And so, but she discussed alienation and alienation clause. So you're going to want to know the difference between what alienation is versus what an alienation clause is. Okay.
I don't see it in my.
Here, y'all, you didn't get it?
I don't see it in the group text unless it's more than one group text.
Hey, look here.
I just see.
Tonight at 8 o'clock. Don't be late.
I just have the text. I think that was her texting, reminding us of the session yesterday, but I didn't get.
Okay, what I'm gonna do is I'll get with her and see when she's gonna send that out. Let me see if I got it. Hold on one second. I thought she sent it out. Okay, I'll get with her, and I'll see when she's gonna send that video out, and then I'll make it available. I'll let y'all know on that. But this video,
Okay, so the questions, wait, man, the questions we was about to go over, you gonna send them to us?
I'm about to send you
Or
the
the
test.
link?
Okay, so
Not the state questions, the national questions.
so the questions that I'm about to send y'all are test questions from the videos that I posted last week. That's gonna cover math questions. It's gonna be about seller net proceeds. It's gonna be about gross win multiplier, and it's gonna be about commission. Don't look at the videos when you're doing these questions. I want to see if y'all can answer these questions without referencing the video. If y'all can't, just then go to the video that's specifically talking about the section that, like, say for instance, you get one of the gross win, because I want y'all to do the questions and then send them to me, and then I'll grade them, and then I'll let you know what you got wrong. Or I'll just do a video. You know what? I won't even do that. I'm gonna do a video. I'm gonna send them out today, and then I'll do a video tomorrow going over the questions. So that way, if you got anything wrong, then you can see if you got it wrong. Now, this week, what I was saying, Edith, is I'm gonna have a bunch of finance questions for y'all to answer from finance. All right, and I'll probably I'm off until Wednesday, so I'll probably have those to y'all like tomorrow's a holiday, so like Tuesday I'm gonna try to get about 40 or 50 questions typed out for y'all to answer. These are just going to be finance questions, okay? And y'all, I want y'all to answer those. So I'll send those out like Tuesday. But what I'm trying to do is I want any video that I make, I want to be able to test y'all on them, so I know that I can keep it moving. And then over this, because I want y'all to be ready to take this test by in the next 3 weeks at the most, by like January 20th. I mean, July 20th, my bad. I'm talking January. July 20th.
I'm going to bring you this book this week. You just got to remind me on Wednesday that my friend who took the Georgia test and her finance section is nuts.
Really?
Yeah.
Okay. And I know, Carrie, you said you got the CompuCrown, right? Test.
Yeah. Mm-hmm.
Okay. So I want to get over with this finance section by like Wednesday. So I got to have these questions to y'all, because I'm going to move on to another section. Because honestly, I told y'all, I think that if you can understand the secondary mortgage market and how that works, that's going to cover a lot of the finance. And so that's why I kind of go all the way back to get you to understand how all of this happened. And once you understand how all of this happened, now all we got to do is perfect the definitions and know the definitions. So I'm going to send y'all this test right now, and I'm going to actually send it out to the entire group. And then y'all answer them. I'll type out what I want y'all to do with it in the email. And then that's pretty much it. Okay. So if y'all have any questions, I'm
already. Thank you. You know I'll call you like a study.
Oh, no doubt. No doubt. Y'all got any other questions, just let me know. And y'all have a good rest of y'all day.
Happy 4th, y'all.
Happy 4th to you too. Yep.
Okay.